Welcome back for another top-notch video. This week, guys, we're looking at the week of February 4th through February 8th. We are into the second month out of the year. As always, this channel is about TSP, Roth IRAs. We follow the general indices. So if you're in the TSP, we follow the CSI and F fund. Roth IRA, those are the ETFs, IVV, VXF, EFA, AGG, and these are all general indices, the S&P 500, Dow Jones, small caps. We have international markets and we have bonds. What we usually do is we go over kind of a general overview of these funds, and then afterwards we kind of go into more in-depth detail for each one, and then our allocation. So let's jump right into it for this week. So these charts are from TSP Talk. As you can see, for the week we were up for all our TSP funds, the CS and except for the I fund. The I fund did take quite a hit. So other than that, though, we were up for the week, so that was good in all of our funds. Markets are kind of really stretched right now. I mean, we're at 12% only the first month and a half into the year, so that's pretty incredible returns. So just keep that in mind. These charts are all from TSP Talk. A guy named Tom does the commentary, and let's just kind of go into some of his general charts. So as you can see here, we have the S&P 500 or the C fund, IVV, ETF. Obviously, we got right around the 14th, right before we hit some of the 50-day moving average, we decided to kind of scale out just because of this V bottom. Usually, there's a process when we have such market volatility, since we saw in fourth quarter. Saw that here, and we haven't really seen that here yet for IVV. Now, this could be a V bottom. Ideally, we'd like to see this jump above the 200-day moving average to get back in. So we did lose out a little bit of our gains here. We ended up getting out here thinking that the markets might hit some resistance here. It blew right through the 50-day. It moved right through this here, the line we have here, and then we're stuck right at the 200-day moving average, and it did bounce off that as resistance. Now, it's just important to keep in mind that with such volatility that you just want to be very, very careful here. So we're just being careful, and we're waiting to see where this goes. Markets really need to get above this level for us to get to move more of our capital in at this time, and we'll show that in our charts. With small caps, we did see it move just a little bit above the 200-day moving average. So that's a very positive sign. Again, we did pull out right around here. We were in the S fund total, so this is we're in VXF here, the S fund. So we ended up pulling out right around the 50-day moving average when it hit that, and we did okay. We thought we'd see some resistance in here, and we didn't. So that's fine. The biggest thing is when there's moves that you just don't know about, or you want to be cautious. So we're just playing cautious a little bit. We lost a little percentage because of that, but I'd rather play it safe than end up heading all the way back down to this bottom. Again, we are a little bit above our 200-day moving average. We'll continue to watch it. Hopefully it consolidates above that, and we'll move on. With EFA, there is basically just not the greatest economic data coming out about Europe and some of these other countries. We'd like to see more of maybe possibly a trade deal before we could see some action on this. As you can see, there's a lot of lines going on in here. I really would like to see this hit the 200-day moving average as well. As you can see, it's consolidating below the 200-day moving average. We did make a little bit of a higher high here, so that's a good thing, but just keep that in mind. And then, of course, we have AGG, which is doing very well, continuing to move a little bit higher. But I've just been so skeptical of AGG ever since last year. I just don't really have the confidence in it, and I'll show that in the charts a little bit later. The next thing we're going to look at is just some historical examples from Grow My Thrift Savings Plan. Okay. So something very interesting to keep in mind, and why you might have wondered why did we scale out so early in January. So as you can see, this is the kind of a much larger chart of the S&P 500 or the C fund, IVV, basically with the moving average, the 200-day moving average, moving up here. You can see that we had support here back in 16, support here in 16 on the 200-day moving average. And then in 18, we had support all along the 50-day moving average. Great year for 2017. Saw a lot of volatility in 18, but we still had good support on that 200-day moving average early in the year, and then in October time frame is when we start to saw markets slip below that 200-day moving average. That is a warning sign for us as a tech trader, and we just want to be very, very careful with that. We rode all this volatility here, and we rode that right around back up here to about the 50-day moving average, and then we decided to pull out just because we thought we could see some volatility here. I really need to see this get above this line here just to prove something to us. I'd rather have it prove something to us and lose a little bit of percentage than head all the way back down to this untradeable V bottom. This is a great example. This is 2008 of what happened here when we had the drawdown. Looks very similar. We had some support in here on the 200-day moving average. We had some resistance in here, and then when we eventually fell below that 200-day moving average, we saw some consolidation, which was a tradable bottom, but we could not get above that 200-day moving average. And because we did not get above that 200-day moving average right here, we ended up going back down, and really bad things happened after that. So are we here? We don't know. We don't know what the future looks like. We can only look at past charts and our tech charts and try to mitigate risk. And so that's what we're doing right now. We're just mitigating risk. We had a very, very good January, one of our best Januaries on this channel, and now we're just mitigating risk to see where markets go. If they go above that, of course we'll jump right back in. But if they stay below that, we'll probably stay out for a little longer. And as you can see, this consolidated for quite some time. You're looking at January, February, March, April, May, almost June, so almost half the year this was consolidating. So we just have to have some patience, guys. That being said, that's kind of the general overview. I know it only went into one fund, but usually one fund you can just kind of get a very basis of what you for your TSP. So now we'll move into more Pacific, the more Pacific overview for some of our funds. So we have IVV. As I mentioned, some of those other charts, we had this is the C fund, by the way. We had this very, very strong rally, and like I said again, with this strong rally, it decided to bump up against that 200-day moving average and then bump back down. Now we do have this trend line here. Will we receive some resistance here? We'll have to wait and see that. But based off of our charts here, I don't think we'll see that. We are up on the weekly chart, but we did start to see a decline again off the 2-day chart. Now this 2-day chart, the DO was sitting at a couple days ago, the 31st of January, 5.828, and then 5.14, so going down, 5.04, and now we're at 4.43. So with that, we're just kind of seeing a flat market indecision here with price. I don't know if we'll see a bounce. We could possibly see a bounce like we saw back here in November, but with that, it was a very small bounce, and then we had a very nasty December. Ideally, as long as the blue line is above the red line, we're doing well. But we are out of the game right now, waiting to see where this goes. I would like to see it, again, consolidate above the 200-day moving average. Even on the 4-hour chart, we are below that, and I would need to see this come back up and hopefully see the data improve on the 2-day chart to support the weekly. So that is what I'm looking at for IVV or the C fund. Moving on to the VXF. With VXF, as you can see, this is the fund we were in, then that we stayed in pretty much for all of October, all the way down to the bottom, and then we rode it out to about, I would say, January 15th-ish, somewhere right around the 200-day moving, or I'm sorry, the 50-day moving average. And we did have a resistance trend line here, just a little bit above that. It didn't give us a position to get back in here that I felt like, and then we exploded right through that, and we didn't quite meet the 200-day moving average on this chart, on the FinViz chart. So keep that in mind here. With this chart here, I really need to see it like I said with IVV or the C fund. I really need to see it above this and consolidate above the moving averages. We have good moving averages with the 20-day, the 50-day starting to turn back up, but the 200-day is still very flat, and that is concerning. So we might see some resistance bounce off this. If so, be a good point to get back in, kind of right where we got out, right around here if we can see a bounce. But we're really looking to our charts for that. So let's move on to our charts. As you can see with the weekly, we are doing just fine. Very positive, good weeks every week since the beginning of the year. But on our 2-day chart, we are still on the decline. So we've had this kind of long period decline. Usually we can see markets still move up a little bit, but you just want to be very cautious once you see these. These charts can move down very, very quickly once they come off their energy. So we're just waiting for that. The blue line is above the red line still. We see some indecision up here, waiting to see where this goes. But on our 4-hour chart, we are obviously below. We need to see this cross back above before we'd even consider moving back into this fund. So with VXF and IVV CNS fund, there is no tradable option at this time. And we do still have 2 trades this month, but I just don't see any options into these funds at this time. Moving on to international markets, or EFA, like I said, sitting way below our 200-day moving average. It's been a bear market ever since the basically last year, or mid last year. We have not seen it get above that 200-day moving average since the summer, and it's been below that the entire time. This is what we don't want to see with our other 2 funds. So this is why we're playing it cautious. As you can see, it bounced a little bit above that, and then it continued to follow this trend down. And we just want to be very, very close, because the markets can decrease quite significantly when they trend down. So again, we are moving below the moving averages here. We have a 50-day flat moving average. We have a downtrending 200-day moving average, and there is no position for this chart right now, and we'll show that with our stock charts here. So with the weekly, as you can see, we are up on the weekly, which is great. It looks very, very good. But then when we move to the 2-day chart, we are also in a decline here. We had our first kind of really big decline in that week there, and I would expect just to be very cautious with this. I need to see this chart, the energy continue to go back up, and the blue line stay above the red line to see any tradable position. I also need to see this on the 4-hour. I need to see this 4-hour come back. I'm just not confident at this time with EFA or the iFund. So that is our iFund. And then, of course, we move to bonds. With bonds for 2019, January wasn't the best month to be investing in bonds. So we stayed out of that. We were in the S fund, recovering some of our market loss from the fourth quarter. And then with that, we did see a decent uptake for the start of February, but again, like I said, moving averages do look good. Usually when bonds are doing good, stocks are not going to be doing as well, so we're keeping that in consideration as well, but we're just not ready to invest in bonds just yet. We need to see more evidence. I'd like to see it break this trend line to maybe invest in AGG. When we look at the charts with AGG, here's why you can see some of my concern. With the weekly chart, we are on the decline. Whenever we're on the decline, usually in a weekly chart, it can be any time when we can start to see this volatility pick up and see a large decrease in funds. So like we did for fourth quarter for AGG. So we're just not very optimistic with that. On a 2-day chart, we are kind of just sitting. We are still above blue line, above red line, but we're just sitting with just not a lot of energy either direction. I need to see charts make some moves here so I can make some decisions. And then, of course, on a 4-hour chart, it is picking up just a tad bit, but not enough to invest. So those are our funds for the week. If you guys have questions, please write those in the comments below. As always, please like, subscribe, or share to the video. I really appreciate you guys watching. And, of course, our allocation, we are still in the G fund since 14th January. Hopefully we can see a little bit of a decline this next 2 weeks, a little bit of a pullback, so we can get back in. We might not make the exact 4% that we lost out on if we would have stayed in the S fund, but hopefully we can see positions improve a little bit, get that little bit percentage back, and avoid some of the risks that we might have seen with some of these charts. We're just trying to avoid big moves that, like, if their charts were to move all the way back down to their bottom. So I think we're in a good position here, guys. Like I said, if you have any questions, let me know. That's another top-notch video. We'll see you guys next time.